I just finished an interview with a company called Nobody Studios. It's interesting because as I look through and do all my research, I'm trying to find alternative investments. I'm looking at different companies all over the world. And then if I find something interesting, I bring it to you. Well, I had to correspond with them first through email, then a video call. Then I managed to actually get all of the guys together from this company, all the top level individuals, into one call. We recorded that and here it is. So I wrote down all the questions I had about the company for myself because if I want to be an investor, I want to be informed, and I thought that would make a fantastic video. So here we're going to discuss everything about Nobody Studios and what this company is all about. Check it out.
Right. So, and with a lot of these live streams that we've been running, it's been a great chance for everybody to sort of share about what they're working on and what we're doing in the studio. So, Nobody Specials is a really great chance. We've got Mark S. McNally, our Chief Nobody, as we affectionately call him, or CEO, if you're like, if you prefer. We got Greg Lovett, who's our Chief Financial Officer, and myself, Barry O'Reilly. I'm our Chief Incubation Officer at Nobody Studio. So, great sort of breadth, hopefully, to share. David obviously has a fantastic YouTube channel. Highly recommend you check it out and subscribe at the Money GPS. You can see he's got the candlesticks ticking over behind him as well, making sure he's not missing out on any opportunities all the time. And already we've got people saying hi, how we're doing, people dialing in from pretty much all over the world to listen to what we're doing. So Caesar, lovely to hear from you in Atlanta. Folks, make sure you throw some questions at us as we're going along, but I'll throw it over to David, let him sort of lead and share a little bit about his curiosity about what we're doing at Nobody and go from there.
Yes, absolutely. So I guess I should start where this all began and how I found out about you. But I'm always interested in alternative investments because the traditional look at investing is 60-40 split. Let's invest in stocks, let's invest in bonds, and that's it. And that really failed in 2022. And we saw that the numbers were very clear. So I'm always on the lookout for new things. So one thing led to another, and I found Nobody Studios, and I started corresponding via email, and then we got into a call, and then I said, you know what, we have to do an actual interview because I really want to know more and have my audience know more about this as well. The traditional way of investing, I think, has really changed, and a portion of our portfolio should contain alternative investments. We don't necessarily want to put 100% in anything. We don't want to have our eggs in one basket. But I think that having diversity is going to always be something that we can improve upon. And I think it'll make a big difference long term. So that's where I think Nobody Studios comes in. And I kind of wanted to learn more about it.
Yeah.
In terms of, some of the questions I had is, people want to have this sense of community, I believe. You got Kickstarter, you got GoFundMe. And I've been finding a lot with my research that you've got literally millions of dollars that go into new products and things. And my understanding of Nobody Studios is it kind of has some of those elements. So if you wouldn't mind shedding some light on that for me, like that element of community and how a community can actually invest in the way that they do.
Yeah, no, I think if you go back to the root of who we are and our brand, and we pick our brand at a very young age, we knew we wanted to build companies at scale. We knew we wanted to do something that was really gnarly in terms of 100 companies in 5 years, international presence. Like these are things that, should laugh you out of most rooms, right? And we knew it. But we knew that in order to do it, we're going to have to attract a really amazing group of people to the journey. And so Nobody Studios is a brand rooted in the very beginning of that vision, saying we're going to have people like Barry and Greg and Tiffany and Sejal and all the people who are part of our executive team and others that walk in with amazing backgrounds, experience, and instincts. It's that we still have to check our ego at the door because we're all trying to build something bigger than us. And I really think that we benefited from the pandemic because this was crafted a little bit before the pandemic, about a year. And so when people are coming out of the pandemic, they're like, yeah, I'm just not going to just try to earn a living anymore. I want to do something bigger than me. I want to make an impact in the world. I want to jump out of bed again. And I just think that, the ethos that was a byproduct of our own careers that led into this vision benefited from what we were all collectively kind of feeling, a couple of years ago. And it hasn't stopped. I think that it just keeps building on people walking in the front door with amazing backgrounds and experience and passions and saying, I want to be a nobody. And every time I hear that, I just smile inside because I just know it's bigger than us. And that was always the intention.
That sounds great. When I just want to, just for my audience who's just completely unaware of what Nobody Studios is, the way I found out about it was it's a startup that invests in startups. That's kind of the way that it was presented. But if you wouldn't mind kind of just expanding on that, like what is it?
Yeah. So again, offer the rest of the team to take a crack at it. But I would just correct on one thing. We're a startup that creates startups.
Okay.
And it means that we're founders, right? Because investing implies you're a passive investor. That's a venture capital world. A couple hundred people come through your offices every year and you decide to invest in, your 10. We actually are hyper focused on picking categories we care about, building business models we believe in, and then building the teams around them and building them from the ground up, which means it's, we're putting in the technical capital, the marketing capital, the strategic capital. We're also putting in the capital it takes to grow these companies. We are true founders of these companies. So we love coming across early stage founders that have ideas. We built some great companies around them. We've also acquired a few early stage companies, but we've built a lot that came right off the whiteboard, and we built into companies into the market. So that would be the big differentiator, especially when it gets into the financial model and how it plays out. Because we're founders, we own the majority of the cap table from day one.
Yeah, I think the closest model to what we're doing is kind of an incubator model, which has been around for a while, right? And the big difference between what we're doing as a venture studio and an incubator is that typically an incubator is really like a third-party company, right? So they'll come in, and historically Office Space was something they would get and they were all excited. That's all gone by the wayside now. No one really cares. But you'd wrap marketing resources around them and development resources, then you kind of level them up and send them on their way, and you'd probably take a fee for that in some capacity. The difference, like Mark was saying, is that we own the vast majority of the company. So we'll partner with founding teams, or we'll acquire, and then we're also focused on the very earliest stages. So that's where we shine. And then then they'll kind of leave the nest, so to speak, and continue running with outside capital outside of the studio, having come in through investment. So
part of what piqued my interest in Nobody Studios initially was that I'm an e-commerce seller, and I've been doing that for many years. And so there's such a big response from venture capital and what they call aggregators, that they've just got money and they want cash flow. And so these businesses, Amazon businesses out there, are just being offered money to get their businesses, to put them in their portfolio and sort of take that on. And that really didn't exist a few years ago. And that kind of fits in sort of with the same thing of Nobody Studios, in this thing that, maybe it's a new concept, but it's a way that, in my opinion, could be something fantastic. So my question is, what advantages, would an investor have, myself, potential investor? What would I, have that advantage of investing with you versus investing in, let's say, just a traditional stock or bond?
Yeah, so I can take this one. Like, there's some unique superpowers, I guess, we have as a studio, but they're also passed on, if you will, to investors in the studio. So probably you mentioned diversification is something that you're always interested in, and as an investor. And probably one of the most unique aspects about our studio is when you invest into the studio, not only do you own a piece of the studio itself, but also you have a pro rata for every company that we create. So we're trying to build 100 companies over the next 5 years, who knows beyond that. So really, one investment in Nobody Studios essentially is giving you opportunity from 100 companies that we're going to create. So that's sort of a really unique aspect about it. Every time that we exit one of those companies, whether they're acquired, they go through a merger, maybe even they might IPO, you would see the equivalent of sort of like a dividend. There'll be a payout for each one of those companies. At the same time, you'll still own the stock that you own in Nobody Studios. So that will be accruing value as well over time. So it's a really interesting way to sort of diversify very, very early and invest in early stage companies where often there's the biggest chance of returns, right? We own these companies from the inception. We make a relatively small investments in them, $250,000 to sort of get them off the ground. And we're not modeling any exits really over $100 million. So this is like building them cheaply, exiting them in early to mid stage. And then, you can all do the maths. If we're putting in $250,000 and we're selling these for 25 million, 50 million, 100 million, that's a pretty healthy return for investors that they could be getting numerous times over the lifetime of the studio. So we think it's a compelling investment opportunity. I certainly have not seen anything like it. It was one of the things that attracted me to the journey. And I think anyone, whether you're an accredited investor, a very experienced investor, or someone who's just starting off as a retail investor and their first sort of foray, if you will, into venture investing, this is a great chance that you can make, a small investment and actually learn a lot about how companies are built.
That was actually going to be my next question was, do I need to be accredited? What is the minimum investment? What is the maximum? All those sort of details. Is there any restrictions on that?
Yeah, I'll take that. So the answer to the whether or not you have to be accredited is no. And don't get Barry and I started on, we'll go off on a rant on how unfair that's been historically for people needing to be accredited to be able to invest in vehicles like this, right? It's kind of it's super unfortunate. So we're now in this realm where we can do crowdfunding raises. It's not really, to be honest with you, it's not the most efficient way to raise capital, but we do it because involving the crowd and enabling people who've not historically been able to invest in vehicles like this, being able to, it's kind of core to who we are. We want to open it up to everyone. So no, you don't have to be accredited. The current campaign we're running is on Republic, the Republic platform, so it's republic.com/nobodystudios. You can invest as little as $100. Maximums are on the Republic platform are at a certain threshold, but there's also investments outside that we take, and those, again, that could be in the millions. So it doesn't have to flow through the platform. So yeah, if there's someone out there that wanted to invest that level, that'd be a conversation with us directly.
Now, when I look at investments out there, for instance, my e-commerce business, I look at that not as necessarily as a business, but I look at it as an investment because I apply a certain amount of capital and I expect a certain amount of return. And then perhaps there's a sale come in at the end of that. And I'll take that for anything. It could be a stock, it could be real estate. There's an amount of capital you invest and then potential return on investment. So would you say that sort of applies to Nobody Studios as well, that it's considered to be an alternative type of investment, venture capital? I think venture capital being so foreign to a lot of normal people. They're just not in that field. They've never been able to do that before. And I'm just trying to, put that sort of in sort of a box, if you could.
Yeah, you guys want me to take that one?
I'll take a swing.
Okay.
I'll comment one thing that I think is really interesting, right? So most investors always have this feeling that there's people who are on the inside, have some kind of secret sauce to like some kind of leading knowledge by a year or 2 or 3 than the rest of us retail investors, right? And I've seen that, by the way, up close and personal when I took my company public at 25. Like, you have no idea how insider the market really is. But I think it's really ironic why there's an opportunity for us is that there used to be this model that venture capital created companies. And there was a deal with the investment banks that I'm going to take a company through Series A, D, and C, and then you take it public. And I'm going to give you a 25% discount on the public offering, which means that went right into mutual funds. So the mutual funds that we got accustomed to for 20 years and had 12% returns, right, were fed by this machine. It was not hard to have a 12% return if you could make 25% return on a single IPO, right? And then Wall Street woke up one day and realized that companies like Facebook and Uber and Lyft and all these other companies were not going public as early as they used to. They were sitting on the sidelines and raising private capital in the billions of dollars. So when they finally went public, they're going public at 30, 40, $50 billion market caps. That's unheard of. I went public at a $300 million market cap. We rose to 4.5 billion, but that's how the market used to be. So what did Wall Street do? They said, well, we're not used to seeing the pops we're got accustomed to. So we're going to take all our big money bags and we're going to go to Silicon Valley. And the venture capital funds that used to have $150 million to deploy suddenly had 1.5 billion to deploy, which translated into bigger checks, which translated into the problem we're having right now, which is when you talk about long-term investments, you used to always be exposed to this in a way you didn't realize. Mutual funds benefited from it. But now that the money's moved into, Silicon Valley and the venture capitalists, the retail investor is no longer seeing the pop they were used to. So it's no longer an option. Everybody has to get creative. Family offices, sovereign wealth funds, retail investors are all saying, how do I get my bite at this apple that I got used to? And we represent that.
Excellent. That's one of the things that I cover regularly on my channel. The way that IPOs had worked, and there are quite a few IPOs still, but as you said, companies are waiting and they're getting money before going IPO, and that has really changed the landscape a lot for people. And of course, sometimes the IPO and that company, they set a valuation so high it's impossible, and a lot of times it really dumps after that. So some people get rich off of it, but most people don't, and that's really one of the things that investing at the bottom, there could be risk associated with it, but you have the most potential for growth at that point because you're really at that infancy of that company. And so that's one of the things that I was interested. I know it's impossible to tell, but what is sort of the potential? What are we looking at here? Like, you invest a certain amount, or that company starts at, let's say you said $250,000. What can I expect?
Yep. Yeah. So there's a couple different ways to look at this. This is an interesting play for most investors because really the value is in the holding. So Barry talked about it a second ago, is that the way investors make money, the team, by the way, the structure is the same across the team, advisors, and the investors. It's all the same. The way we have our upside is when the portfolio companies go through a transaction, right? So they're bought. They could go public, but we think in most cases they'll be bought. So when that happens, we get a return at the studio level, and then we distribute those proceeds. So just based on the distributions alone, we're projecting anywhere from 4 to 8 times your investment over 5 years. And then over 10 years, it really jumps up to between 24 and 55 times your investment. So, those are big numbers, right? And even if we're half right, everyone's going to be extremely happy. But that's just the distribution. So that doesn't even factor in the value of the equity that you'd own in the studio for a machine making distributions like that, right? Because as you can imagine, if you own stock in something that's making distributions like that, that stock in and of itself is worth a lot of money. So it's a pretty interesting model. Like Barry said, I had not seen or heard of anything like it before I joined. And for investors, it's got a lot of potential for upside.
Who would be the buyer on the other side of this? So you're growing this company, $250,000. You invest, you put the time in. Now it's coming time to sell. You think it's sort of that right moment. Who are the potential buyers?
Yeah, it's kind of interesting, right? Our portfolio is very, again, diverse by design. We've got natural concentration areas around health and wellness, creator communities. We've a lot of passion for e-commerce. Mark built a FIFA World Cup website, one of the highest traffic websites of all time. But we also have an amazing group of investors and advisors who are captains or kings of their industry. So when they learn, their networks learn that we're building companies in the health and wellness space, and we've got some of the best physicians, investors in that space, and they're part of our studio, and our studio is building companies in that space. Naturally, there's curiosity about what we're trying to do. But the direction of the companies is also informed by these people who know where the gaps are, where the market's underserved, where there's opportunities that we could build something quickly and actually have a lot of success and become an acquisition target. There's the famous adage, and Mark says this a lot, like companies aren't sold, they're bought. So we're really designing ourselves to create great companies that show great growth trajectory, that they're businesses that stand up on their own right, but they're very targeted around niches or gaps in the market, informed by our investors, our advisors, and ourselves, which makes them an early acquisition target, right? Like we don't have to have massive valuations for these businesses to be successful. We just need to build solid businesses that show growth, and then we are optimizing for early to mid-sized exits, right? So we're actually trying to get acquired early. So I think that makes it an interesting target, if you will, for these bigger corporates that are missing certain technologies, products, services that are in their portfolio, and we're not an inflated price that they could probably acquire it at something that's realistic to them.
For a lot of people, they may not know, but there's so many businesses out there right now, like LVMH, one of the biggest companies in the world, that has a finance arm, and they just throw money trying to buy different businesses. So I wonder if that would be sort of the potential, or other similar companies that they want cash flow, they want to acquire an asset that's already built up. And so it would be interesting to see if that sort of happens, because I'm noticing a lot of companies going towards the alternative. That's really been a trend for me that I've seen. They're not going towards the 60-40 split anymore. Like that really is gone for a lot of people, especially after 2022. Like in the financial world, that seems to have not entirely disappeared, but they're going that route. And we were talking about mutual funds earlier. People don't want mutual funds anymore. Mutual fund, like businesses that have structured their entire enterprise around mutual funds, they have to change the game, because they were investing in, the way they were doing with all these fees. It's all fees on fees, hidden fees, and so on. And now what we're seeing is ETFs basically wipe their business out. So the way that they're doing things, I think there's going to be a lot more capital going towards private interactions and things like maybe like Nobody Studios as well. So do you have any insight on where you see sort of the landscape, where we're moving 5 years, 10 years down the road, and how that looks?
I'll chime in and say that, I think you just hit on something with LVMH, right? Like, I think they're what we see in the market. If you've got yourself to a publicly traded level, especially they're the kings of their own industry, you have access to things that other people don't have in terms of capital and finances and resources and stuff. But your ability to innovate, I mean, the book was written 20 years ago. Like, you can't innovate. And if you wrote the book today, you'd say you're doomed, because innovation is going to completely make you irrelevant, because the shifting changes and the paradigm shifts, like from AI and robotics and crypto, like it's so complex when you have an existing business that you're trying to defend. You can't possibly figure out how to make sense of that stuff, right? And Barry Riley wrote, is one of the authors of Lean Enterprise. This is a whole series around this stuff, like understanding how to innovate rapidly. Enterprises can't. They couldn't 10 years ago. They couldn't 20 years ago. They're doomed in the next 10 years. So what is LVMH and other people are going to do? They're going to take their assets. Sun Tzu, what are my strengths? They're going to double down. My strengths are, I have assets, I have resources, I have public capital, I can spend money other people can't spend, and they're going to have to acquire their way into being innovative. I am 100% convinced of that, which means the acquisition market's about to go white hot. And it's ironic that it's a time that venture is only creating unicorns. So people are hungry to acquire, but everybody thinks they're worth $1 billion and they'll have a PowerPoint and they're in their garage, right? So we actually think that the two markets are passing in the night, which is one of the core theses of Nobody Studios. We're going to build highly qualified, early stage, high quality companies with metrics. We're going to be disciplined on the cap table, and we're going to be completely happy with the early to mid stage exit. So this appetite that we think is going to explode right now in the next 10 years, we'll just be serving those up to really great, partnerships. And the reality is you probably will see repeat partnerships in that model. And we're having those conversations with, corporate teams who are like, hey, you guys are teeing this stuff up. What if we give you more ideas? What if we give you more access to some of our data? What if we, it can be a really fortuitous cycle if we get this right.
How hands-on is Nobody Studios in the companies that are being built up? Are they day-to-day operations? Are they more sitting back and watching and improving and disapproving? Like, what is it in terms of nobody's involvement?
Yeah, so like as Mark said, and we're co-founders. That's how we think about these businesses. Often when people think about hear a venture studio, like they try to understand what it is. And we're not just a VC where we just give people money. We're not an incubator where we just sit there and come up with ideas. We're not an accelerator where you just get a branding and say you were in Y Combinator. We're bringing the best of all these things together, right, to focus on early stage businesses. And as Greg sort of mentioned, like us sort of being involved very early and funding the team with not only capital, but capabilities, right? Entrepreneurial experience that they're looking for. If they're two technical founders, like one of our companies thought Forma as a low code, no code platform, two fantastic technical engineers, world class, but they needed to learn about sales, marketing, talent, recruitment, capital raising. There's so many things involved in being an entrepreneur, and sort of expecting that one individual can have an idea and then suddenly be fantastic at all these different capabilities is just unrealistic. So really, that's one of the things that's appealing about the studio, right? You've access to people like Greg, who's built numerous startups, who've got them acquired, who knows the funding and operating of a great company. What does it take? Mark's done 14 startups. I've done 5, and we're just 3 people in the studio. We've got another 50 people plus a bench and investors and advisors out there. So it's just access to the people who actually care about your business. We're not writing checks and cheering you on. We're writing checks and rolling up our sleeves and building with you. So I think there's a lot to be said about the complexity of technology. Like nobody can understand it all. The challenge of being an entrepreneur. Nobody's brilliant at everything that's involved in starting the company. But we believe we can achieve more and a higher success rate when we bring all of these capabilities, skills, expertise together and get behind these companies as co-founders and take them to their potential. And that's sort of, I think, the exciting part about what the studio is offering people.
Yeah, I think about it like, we've got a very systematic way of taking these companies. This is what Barry runs, right? So very systematic way of taking these companies through this process, and we've got like milestones to hit. So if we're working with a team that came in from outside the studio, we just slot in the other pieces that they aren't, right, and still work that process. And if we're taking it from the whiteboard ourselves, then we're pushing in resources to each one of those positions to hit each one of those milestones. But like Barry said and Mark said, we're heavily involved. So the studio team proper is heavily involved, and then they kind of go off and work on the things that we as a team have decided to work on.
That was also what I was going to ask, is that when you're building these companies, are you going from ground level, from scratch? Somebody pitches you an idea and you say, hey, let's run with that. Or is the company sort of already established? They're kind of already got the ball rolling, and then you come in and you make an offer on that company and you do a deal. Like, where does it begin at Nobody Studios?
Yes, and yes. Go ahead,
Yeah,
Mark.
I think so. First of all, it's worth pointing out, because in venture studio land, there's different ends of the spectrum. We are highly invested in the idea of ideation, right? So we love the idea of ideation and focusing on certain categories and building expertise around that, right? We've been fortunate that the angel group that got us off the ground, I mean, almost I couldn't have invented it if I scripted it myself. Like, just really world-class people in lots of different industries who are invested obviously early. And we're putting them into advisory groups. So we're thinking about hospitality or health and wellness or, climate tech. These are people who are kings of their industry already, and they're contributing to our ideas and saying, hey, that makes sense. We should do this. It's a big part, big problem in the industry. So that's given us confidence in birthing ideas. But we always said that our ideas would come from 3 areas: ideation ourselves, early stage acquisition, which I think that we've probably changed the ratio on that. We think that's going to be a bigger part of our business model over time, probably 50% of our portfolio. The important part there is to realize we're not looking for, competing at the later stage, investment kind of stage. We're looking for early stage teams. Maybe they have an MVP, they've got a great core team, maybe they have some friends and family involved, but there's probably not professional capital involved, right? But we can bring them into our studio and make them a part of our growth, but they also get a part of everything we do after that. So we can make a pretty mean argument. And then the third category is we partner with corporations. So literally, corporations will tell us openly, we're looking to acquire companies like this. We can't find anybody. This is what it's worth to us. This is what the team would look like. This is what the technology would look like. And if it strikes a chord with us, we go build it. And there's no obligation, but it at least inspires some of the things we build.
Like, I was just thinking, I have a friend of mine he's always got these fantastic ideas. He has one that I think is fantastic. It's just been sitting there. Nobody's created this product. He created a prototype of that product. It's just sitting there, and he doesn't have the capital to actually bring it to market. But I think it's such a fantastic thing. And I don't want to say what his product is, but it just hasn't been developed. So would that be something that somebody could pitch to you, or this is some sort of, you do your own thing and you find your own?
No, 100%. Like, we're open book. That's why we're crowd infused. That's why we're doing the crowd equity funding. To be honest, Greg already mentioned it. It's not the place you go for capital if you're trying to find the most efficient source. You're doing it because you're trying to build a network. You're trying to build a network of people who are thinking like nobodies, who are going to call us first. And there's no way we could do every idea people come up with, right? But one of the things that I just did on a podcast before this, and I really mean, we are going to lean into entrepreneurs. So it doesn't mean that we have to be the right answer for everything. If this is not the right deal for us, or the wrong time, or we already have a deal like that in our studio, we'll be like, hey, this isn't a Nobody Studios deal. However, we love what you're doing. Here's 3 things we tell you should focus on. Here's 2 relationships we want to make an introduction to, and we're cheering for you. How can we help you? Right? We really believe that in this ecosystem, all things come full circle. And I've never met an entrepreneur who only had one idea. So, any way we can bring them into our orbit, the better.
I gotta ask, like, how could somebody like this, if they've got a business or got an idea, how do they actually bring that to you? How does that begin?
Yeah, so if anyone's been following our live streams, we've got Min and Kiara who run our Idea Lab. Like, every Tuesday, they're sort of sharing different ideas that have come into the studio. We have a submission process that people are welcome to go look at on Nobody Studios. We'll share the link as well in the chat. But we're really trying to give everybody an opportunity to bring their ideas to fruition. They can share their ideas with us. Sure, some will be within our scope and our ability to execute and collaborate on. Others won't. We'll get back to you as quickly as we can. I don't think there's a phone call that we're live stream that we're on that somebody doesn't come up with an idea for a company that we're like, yeah, maybe we could go build that together. And that's exciting, right? And if we can do it, we'll do it. And if we can't, we'll pass on or recommend someone you should talk to. And we are big believers in abundance. There's so much opportunity out there. It's really just about finding the right people to go build the companies with. And we believe in that. And we've been lucky with a number of the companies and entrepreneurs that have come to us, whether it's ThoughtForma, the Adjacent Possible, who listened to a podcast that we were on and got in touch, and now they're Nobody Studios, company. So we put our message out into the world, and we've been lucky that great people have come back to us.
I'm always talking about the way that people investing, the mindset needs to change in where we apply our capital. Shouldn't be the way we did it 10 years ago, 20, 100 years ago. That's just a failed model, in my opinion. So that's why I always tell people, you're putting money into your energy every month. You've got to spend money on energy. But if you spend it on, let's just say, solar panels, that's an investment. But people don't think of it as an investment. They think of it as an expense. So the whole idea of investing, I think, just has to be, that paradigm has to be shifted, has to be changed. And that's sort of what made me interested in Nobody Studios. But let's say if I'm interested in becoming an investor now, what do I have to do?
Yeah, the easiest way is to go onto the Republic platform, because we've got a crowdfunding round open now, live now. And I think, we popped in the address there. So it's republic.com/Nobody Studios. And so all the information is there on the team and the opportunity and, everything about what we're doing, even the sectors. And so that's probably the best place to start because, were you wanting to invest, you could do so right there on the platform.
is it available to anybody around the world, or is it only US or?
It is. It's worldwide. There's some restricted countries that are,
Sure.
restricted just by their nature of being restricted countries. But yeah, for the most part, it's from anywhere. And we have investors from all over the world. Mark likes to talk about it. Go ahead, Mark.
If you have to ask, you're probably a restricted country.
Yeah, that's right.
Yeah. No, I wanted to pick up on something else you said though, is like your thesis of like investing in things that kind of build up each other and have some energies and like your synergies of your own investments. Like, yeah, I remember listening to Warren Buffett in the earliest days. He said the same thing. He was like, I'm looking for teams in and of themselves are thinking the way I would if I was in their company, right? Which means they're trying to build economies of scale, redundancy, ultimately capacity to be a giant in their industry. And I would just say that I would stress that's something we're trying to do. So an investment in us is also an investment in that ethos. We're always looking at, can we build companies that make us faster? Like, are we building companies that make us grow faster? Are we building companies that make the next 200 companies we build more effective? So it's kind of fun to think about building companies that help make our companies more successful. But it's a huge part of our ethos. I just wanted to pick up on that when you mentioned that.
Like, as an e-commerce business person that I've been in this for a while, I've been trying to expand that, trying to grow it out to different countries. There has been so much attention on the aggregate, they call them aggregators, who essentially buy a portfolio of these different companies out there. And they then would have two options. They buy you out completely, or they would, sort of team up and they give you sort of a percentage and so on. I'm wondering how Nobody Studios works in terms of, you say your co-founders, in terms of, what the founder, or not what the, let's say the person who had the idea and everybody, like, how does that work in terms of shares and all that?
Yeah, I'll take that. I'll start. So yeah, it depends on how far they are along in terms of what they'll retain in that idea, let's say, right? So again, we have people come to us with just ideas, and so they'll become part of the founding team. They would take a certain amount, we would take a larger amount than if they had something built, right? The benefit, though, is that, well, there's a couple things. One is beyond just the capital that they'll get. The second thing is that a lot of the companies that we're looking to acquire are what we call like building block companies. So Mark touched on this a second ago, is these are companies that help us build other companies. So for example, we mentioned ThoughtForma is a company that we acquired. They're a no-code solution. Barry said low code, no code, but they would take issue with that because they're firmly in the no code space. So, and then we built Ovations on that platform, right? And we're looking to build most of our other companies on that platform. When that happens, that team gets direct equity also in those companies. So beyond the fact that when they join us, they get equity in the studio. And so by virtue of being studio shareholders, they get, they participate in everything, not just their company, but in everything. They also get direct equity in the companies that help build. And then you think about it like, right, we're looking to build 100 companies over 5 years. Well, they get 100 guaranteed clients. As someone who's been involved in like enterprise software sales, like if you were to tell me, I'm going to give you access to capital, but you're also going to get 100 guaranteed clients, I would take that, any day of the week. So there's a lot of things that entrepreneur founding teams get when they join the studio that makes it like super compelling for them to be doing it with us as opposed to like going out and duking it out on their own.
There are some people who would say that, investing in this manner is risky. It's too risky for me. I'd rather invest in a stock. I'd rather use my Robinhood account and buy a share of Amazon. What would you say to these people that they believe that it's sort of one or the other? I can't get out of that mentality that certain people, they only do one thing, and that's just, I'm not answering my own question here, but that
Yeah,
people.
I'll take a swing at that. Yeah, I think it all comes down to your own risk profile, and I think that one thing that's been really true for us from the first days of raising angel capital, like we're telling our story generally, and if you're attracted to it, like we've never really asked for investment. People say, well, can I invest? So I feel the same way. Like whatever your retail strategy is, like you make your own choices. Like this is no pitch here, right? Um, on the spectrum of bonds versus high risk, high return, we're on the high risk, high return category. If you have a category of your investment that's earmarked for that, I'd love to argue if there's something better than us, but we're definitely on a really good category there. But it's certainly every personal decision to make. But you know, this is it's hard to compare apples to apples because, as you know, there's risk profiles to everything, and you really can't compare apples to oranges.
I just saw what happened within 2020, where people were experiencing this euphoria of like,
Yep.
let's say Peloton and
Yep.
Zoom and everything. These companies are going to be worth $1 million and 10 million, all these different things.
Yep.
And then suddenly everything changes. The stock just plummets back to where it should be. And people say it's not risky because it's diversified or because they've got so much investment or because it's on the stock market. They make all these excuses.
Well, I'm sure you tell your users that your investment basis is what matters, right? So if something's worth $1 billion, it goes to 20 billion, but you bought it at 20 million, then the froth kind of doesn't matter. And that's kind of what we represent. We're the opportunity to buy at the lowest levels, right? That doesn't normally get exposed to most investors.
Mm-hmm.
In fact, has been squeezed out for most investors the last 5-10 years, more and more. It's not even represented in mutual funds like it used to be 10 years ago. So if you want to have exposure to the person who bought into Facebook in the earliest days and had 1,000 times return on their IPO, I mean, it's not hard to be rich if you make 1,000 times your money routinely, right? I think most retail investors would like to have access to that. And we're trying to crack that nut a little bit and say, hey, we're building early stage companies. You can invest in us. You're part of this. The upside, is associated with all the risk. But we're pretty excited that we're exposing this in a way that hasn't been before.
One of the things, I'm not sure if we talked about it today, but I remember seeing in your presentation that I watched was the way that the investments take place. You sit there, you're investing, you're putting your money in, you're applying all of the work that you can. How does somebody, are they able to, let's say, take their money out? Is there a secondary market where somebody can buy in the shares while nobody's studio still operates from that level? There are all the investors that are within the studio. How do they have access to their capital or not? And are they locked in? Is there a time frame and so on?
I'll take a swing at that too. So there's only one guarantee, which is we sell companies and you get an outcome, or we sell nobody studios and you get an outcome. That's the only guarantee in the documents, right? I'm a big believer that secondary markets are becoming a thing, and they didn't exist even a couple of years ago. So it's kind of cool. I believe if nobody studios builds a brand and their companies build brands, and the platforms like Republic and Start Engine and others continue to build brands and credibility and network, there'll actually be a pretty, vibrant community in terms of the secondary market. But that's not what you invest. You invest because you believe that what we're doing has long-term value, and the companies we're going to create are going to exit. So that's my best answer.
Yeah, I think beyond that, we're also, as the studio gets going, we're looking to do some buybacks and stuff. Again, none of this is guaranteed, but part of what we've been talking about for quite a while is that we want to be able to exit those who want to exit. And we believe that the people who are going to win the most are going to be the people who want to be in this for the long term. So
That's true.
Kind of opposite from what you're describing. We have a lot of our larger investors who are asking how to keep the money in the ecosystem, right? So rather than take a distribution, can they reinvest it? Can they participate and buy back pools to purchase, people from equity from people who want to exit? So we're looking at all those things as well.
I find one of the biggest problems with the real estate investment trusts are EITs, REITs. They are forced to sell every so often, even if it's not the opportune time to sell that property, because they have to apply that cash flow to their investors every so often. They need to sell investments. And so there are some people that are syndicators who kind of do this privately, who say, we're going to exit when the time is right. And although it's nice to be able to get maybe some cash flow or maybe a so-called guarantee, but when you invest, you hope for the maximum amount of appreciation. That's really what it comes down to. So I can see that is ultimately, when you put that money in, you just say, hopefully it works out in the way that I intended, and I get the maximum amount back after so many years. I mean, that's to me, that would be the most opportunity possible.
Yeah, I think that's right. We also, it's like we don't have a time frame, so we're looking. There's two kind of factors when we look to, let's say, exit a portfolio company, right? Because we don't need to exit the studio, we don't need to sell the studio. This will be long term, but for the portfolio companies, right, we have the ability to transact some of them early to fund the studio and allow it to keep building companies, or hold on to those that look like they're trending significantly higher. So we've got all that flexibility, no time frames that we have to make distributions or whatever. But we're incented to do so because the entire team that's where our upside is. So we're aligned with investors in that we want that to happen, but we don't need it to happen too soon, to your point. Mark, it looks like you were going to say something too. I think I cut you off.
Yeah, no, I think that you're trying to make the same point, or you did. When you're investing in the studio, though, like the cash flows, if we do this right, like you just start to forget about your ownership of the studio, which is the most valuable, right? So you asked the question that was worded in a way that's slightly different than how I would word it for the studio, because it's not about buying and selling. It's buying, getting really lucrative payouts, and still owning a part of the studio, which if you're getting those payouts, to Greg's earlier point, is growing significantly in value. So I'm very excited. The first time we started to craft this model, I had CPAs and attorneys and a bunch of people say, you could be way more, greedy wasn't the word they used, but they said you can structure it this way, you can structure it that way. And I was like, no, how do we make the people who bet on this early the biggest part of the upside? Because if they are, then we are. And we've really tried to be really true to that. And I'm really proud of that. So yeah, if we get this right, people are doing really good.
Excellent. Is there any points that you want to make to my viewers out there that would be helpful to them?
You know what? One thing I'd certainly encourage people, like venture has always been a sort of bit of a mythical place, I'm sure, for many people, wondering what happens there, even entrepreneurship and company creation. So I would really encourage, folks out there who might be listening and thinking they'd like to learn more. I always feel like the best way is to sort of make a small investment and actually get involved, like roll up your sleeves and become a nobody. And like we've worked hard to make that barrier to entry as low as we possibly can and as accessible to as many people as you can. So if this is an area that you're curious, company building, venture investing, I'd encourage you, like, we're a great place to do that. Right through, if you're a sophisticated investor and you're probably listening to the unique attributes of diversification and many sort of payouts over time. And, so I think we've created something that's interesting to very different segments, but they can all play together. So that's one thing I think we're all really proud of.
Yeah.
And now I gotta pitch you guys my YouTube channel so we can become partners in my YouTube channel. That would be something good. I wonder if you ever would have a portfolio of YouTube channels.
No, we're ready to talk. You already kind of keyed on a few things, like repeating things that you're good at. How do you do it at scale? You can imagine if you had to do 100 things just like what you did, but you're only doing your one or two. So that's one of the things that we get attracted to, is how do we repeat things and learn over time. So definitely appreciate the the venue, and appreciate my colleagues Greg and Barry for joining. And yeah, I could just say we're always grateful for anybody who joins the journey. We're an open book, and the dialogue makes us better. So regardless of where you might fit into this journey, thank you.
All right. Well, thanks everybody for joining. Again, if you have any questions, drop them in the comments. Go to republic.com/nobodystudios to learn more. And then by the next time we get on your show, Dave will probably see if we've started a company together.
That would be nice.
All right. Take it easy, everyone.
All right. Thanks.
Take care.